Good morning, everybody, and welcome to OptionPit.com. I still need to get some music back. Anyway, I gotta figure out how to put the music on. Anyway, mastering iron condors and butterflies, a good topic for this weekend, actually. Basic condor butterfly strategy, ins and outs of why you trade them, why you put them on, what you're looking for. Okay. Alrighty. I'm just reading some of my clients chatting with each other. This Saturday, sign up. If you actually sign up for this today, I'll give you another $10 off if you send me a note at andrew@optionpit.com. If you saw our morning vol report. Obviously, all our normal subscribers, if you're a normal Option Pit subscribe live or Option Pit Live subscriber in our chat room, you get our Saturday courses, one per month, essentially, or probably about 10 out of the 12 months for free, right? Or gold, platinum, or any higher level. It is a great deal. Ask any Option Pit client, and they would be happy to tell you. Now, without going, hopefully everybody can hear me, and we are going to move on to, we finally have some movement. Okay. Yeah, if any Option Pit client wants to say what a great deal it is, tell me, put it in the chat, and then I'll put the chat on the thing, so that way I don't look so bad. Thanks, Bob. There, Bob T testimony. Right there. So what do we have? Worries. You know what's, and I'm going to say it. I think the worry issue is not. And I would not be surprised if the equity market comes in and bounces straight back up again. By the way, it would not surprise me in the least. By the way, okay. Here is the reason why are bonds doing this? Why are the bonds doing this? Why with the market at highs, are yields at not record lows, but I would say at panic low levels, right? Here is a 2-year chart. Here is our kind of January panic. Here we are above the flashy crash panic in August. Again, all we have done, at least in the U.S., has been what? We have raised, they've stopped QE. They've been trying to raise rates, and yet bond rates are going lower. So the appetite for risk, I don't know how long this is going to last. But I think the treasuries are setting up for a pretty big move. I mean, I think part of the reason is the market keeps thinking that the Fed's going to lower or whatever the Fed's going to do. But it's just causing a lot of volatility. Let's just say that. It's causing volatility in bond prices because the Fed can't make up their mind. Volatility in a massive market like this is going to add to the volatility in our market. 16 VIX now. We finally have a bit of a move in VIX. Let's look at the last 3 months. But realistically, okay, we haven't seen this in a while. Had a little vol from last time. It would not surprise me again if this jump in volatility was short-lived. However, I think it's going to follow through till next week. All right, let's look at it. Again, the easiest thing to do is check the term structure. This is some kind of, we have been discussing this for next week. We're actually closing some time spread positions. We've even blogged about it in the middle of the week. But we're taking profits today on them because the vol's blowing up. And when they want it, you got to give it to them. So we're actually closing long vol positions, some long vol positions today. But here, do you want to put it on up here? I'm not so sure. Okay, The reality is, and I don't think these numbers are exactly correct. 10-day vol is 4%. That seems a little low to me. I have to check those realized vol numbers. They don't look quite right. I know we've been having, well, I know they're in the low single digits. Yeah, I guess they are because they were all, so basically, sorry about that. I had a mental block for a little bit. Shorter term vol, again, single digit vol. VIX got to 13, and it's the volatility has been held up by the Brexit. Sorry, I had a mental block there for a moment. Today, obviously, is you have almost a 1% move. This is actually, you would think of this as a 12 VIX move. So what I would say is it would not surprise me now if volatility actually is actively starting to move. We're in what I call like zone 2. It's kind of like a mid-vol zone. But vol begets vol, and we now could see movement. But don't forget, after the Brexit, whatever the vote is, after the Fed, it's summer. It's got weeks of summertime, nothing. So I'm trying to see what the event is now and looking over the horizon to see if there is a potential. So we will look at using vol products now are going to be a little more exciting because they can move. Right? It's just how nervous the market gets when yields get so low in what I would call sort of the protection, sort of the protection products. So I expect more volatility in bonds. I expect more volatility in equities. Right? At least the volatility will stay relatively rosy. How nervous everybody gets before something actually happens. There's mostly just some strangeness playing out in the bond market, and equities are freaking out. And I think just every day will be a different day on that story. But as far as any position, I think you still want a position where vol can move a little higher, but be ready for a vol sell-off, probably late June, 24th, 25th. And essentially that's how I'm positioning. So there you go. All right, and with that, we have our class tomorrow. We have our schedule today at Option Pit. And again, it would not surprise me if equities just laughed at this sell-off right now because they keep doing it, right? But we definitely now, there is a bid for vol. Keep an eye on the term structure here. This is the key date. Wouldn't surprise me if this is going to be kind of like an earnings event. So this June 24 number, as we get closer, it's going to decay, but the vol will probably keep climbing higher. I don't know if it's enough now to kind of grab to move the straddle number hard enough. But that's all stuff we're going to look at in the chat today. All right, everybody, you have a good day, and I will talk to you later.